A green future, investing in sustainability. Our planet faces unprecedented environmental challenges. Climate change is a pressing issue. We must transition to a sustainable future. Green bonds offer a way to invest in this future. Green bonds are debt securities. They are like regular bonds. However, the proceeds are earmarked for environmentally friendly projects. These projects include renewable energy, clean transportation, and sustainable water management. Investors are increasingly seeking ethical investment options. Green bonds provide an opportunity to align their investments with their values. These bonds offer a way to support environmental sustainability while earning a financial return. Green bonds represent a growing market. They're attracting investors worldwide. This growth highlights the increasing awareness and action towards a greener future. The rise of green finance. A short history. The concept of green bonds is relatively new. The first green bond was issued in 2007 by the European Investment Bank. This marked the beginning of a new era in sustainable finance. The market for green bonds has grown rapidly since then. In 2020, global green bond issuance surpassed $1 trillion. This growth is driven by various factors. These include increasing investor demand, government support, and corporate sustainability commitments. The Paris Agreement, adopted in 2015, has been a significant catalyst. The agreement aims to limit global warming. It encourages countries to transition to low-carbon economies. Green bonds are seen as a key tool for financing this transition. The growth of the green bond market reflects a global shift. We are moving towards a more sustainable financial system. This shift is essential for addressing the challenges of climate change and environmental degradation. Shades of green. Types of green bonds. Green bonds come in various forms. Each type caters to different project needs and investor preferences. Let's explore the three main types: corporate, municipal, and sovereign green bonds. Corporate green bonds are issued by companies. They finance a wide range of green projects. These projects might involve renewable energy installations, energy-efficient buildings, or sustainable waste management systems. Municipal green bonds are issued by local governments and cities. They fund public projects with environmental benefits. These bonds might support green infrastructure, clean transportation systems, or climate change adaptation measures. Sovereign green bonds are issued by national governments. They demonstrate a commitment to sustainability on a national level. These bonds finance projects aligned with a country's environmental goals, such as renewable energy infrastructure or conservation efforts. The diversity of green bond issuers reflects the widespread adoption of sustainable finance. It underscores the collective effort required to transition to a low-carbon and climate-resilient future. The green bond ecosystem: key players and their roles. The green bond market involves a network of key players. These players contribute to its growth and integrity. Understanding their roles is essential for navigating this evolving landscape. Issuers are entities that offer green bonds to raise capital. They can be corporations, governments, or municipalities. They develop projects aligned with environmental objectives. Investors are those who purchase green bonds. They provide the capital for green projects. Investors include institutional investors, such as pension funds and insurance companies, as well as individual investors. Underwriters are financial institutions that facilitate the issuance of green bonds. They help issuers structure the bonds and market them to investors. Verifiers are independent organizations that assess the environmental credentials of green bonds. They ensure that the bonds meet recognized standards and that the proceeds are used for their intended purposes. The collaboration among these players is crucial for the transparency and accountability of the green bond market. It ensures that investments are directed towards projects with genuine environmental benefits. Ensuring integrity, regulations, and standards in the green bond market. The credibility of the green bond market relies on robust regulations and standards. These measures ensure transparency, prevent greenwashing, and maintain investor confidence. The Green Bond Principles, or GBP, are voluntary guidelines. They provide a framework for issuing green bonds. The GBP covers 4 core components: use of proceeds, process for project evaluation and selection, management of proceeds, and reporting. The Climate Bonds Standard is a science-based certification scheme. It verifies that green bonds are aligned with the goals of the Paris Agreement. The standard covers various sectors, such as renewable energy, transportation, and water infrastructure. Regional regulations also play a role in shaping the green bond market. The European Union, for instance, has implemented a taxonomy for sustainable activities. This taxonomy provides a classification system to determine which economic activities can be considered environmentally sustainable. These regulations and standards are continuously evolving. They aim to address emerging challenges and strengthen the integrity of the green bond market, promoting trust and confidence among investors. Sustainable investing beyond green bonds. Green bonds are one avenue for sustainable investing. This approach considers environmental, social, and governance factors in investment decisions. It goes beyond traditional financial analysis. It incorporates a company's environmental impact, social responsibility, and governance practices. Thematic investing focuses on specific sustainability themes. These themes might include renewable energy, clean water, or sustainable agriculture. Investors can target companies and projects aligned with their chosen themes. Impact investing seeks to generate measurable social and environmental impact alongside financial returns. Investors actively assess the impact of their investments. They measure the outcomes in areas such as carbon emissions, reduction, or biodiversity conservation. By embracing these strategies, investors can contribute to a more just and sustainable world. They can align their portfolios with their values while pursuing long-term financial returns. Remember, investing is a journey, not a sprint. The key is to start, stay informed, and be patient. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more financial tips and advice. Until next time, happy investing. Thanks for watching. Comment below with your biggest investing questions and we'll cover them in future videos.